Good morning. Welcome to Trading Hour. It's a Friday morning. Things are quiet after yesterday's monster rally. Today, we're just consolidating on the benchmark indices, but the action, the gains continue in the broader markets yet again. So today, 0.5% rally on the mid-cap index. Small-cap index is up close to about 0.7%. And week to date, the mid-cap index is a gain of about 2.5%. So closing the week on a winning note.
But you know, Rima, it felt like a Friday yesterday, the way markets moved. So, of course, the idea was that after that stellar rally that we saw, almost 500 points on the Nifty yesterday, there could be some profit booking. But now Nifty has recovered from those lower levels as well, very close to the day's high. And Bank Nifty is the one which has turned into the green. So maybe that's something that is pushing the Nifty higher and aiding to those gains as well that we are seeing right now. So Bank Nifty right now in the green and closer to the day's high as well. If we talk about what has changed in this particular our Indices Bank should come up for you on the screen. It is at the day's high. Some of these IT names are also providing some support. So we have the likes of Infosys that is doing well, TCS, LTI Mindtree, HCL Tech. All these stocks are at the day's high right now. So IT providing some support to the Nifty that is coming in right now. But of course, it remains to be seen whether we sustain on those levels. There is a recovery that we are seeing, but that sustaining that is the big question right now. But yes, a lot of stock-specific news that we have. But before we address that, let's address the news coming in just now. Delhi Chief Minister Arvind Kejriwal has been granted bail. Ashmit, who is tracking the court proceedings, is joining in with more details on this one. Ashmit.
So a huge day as far as Arvind Kejriwal and the Aam Aadmi Party is concerned. The Chief Minister for Delhi is being released on bail by the Apex Court. This, of course, is in the CBI case. He has already secured bail in the ED case. He had been arrested. Arvind Kejriwal had been arrested in the month of March in the liquor policy case. Now, what's important is that there were a two-judge bench. Number one, on the grant of bail, both the judges have agreed that the trial doesn't seem to be anywhere around the corner, that the documents in question, that the witnesses in question will mean that the trial will stretch for a longer duration, and that given as how that the trial is nowhere near completion, it is a fit case for grant of bail, that the Supreme Court will lean on the side of liberty, that in incarceration for one day too long, for one additional day is one day too long, and the Apex Court with that on consensus on the grant of bail, he's likely to walk out of jail later today. So that is, again, a big day coming in for Arvind Kejriwal. The second aspect, however, on the issue of the legality of his arrest, there's an opposing view coming in from the two judges. One judge, Justice Kant, has held that there appears to be no anomaly, no issues with the procedures of the arrest, that there is absolutely no violation of the law, and therefore the arrest is good in law. However, Justice Bhushan had a dramatically different view. The Justice Bhushan pointed out that the EDs, that the CBI swung into action only when Arvind Kejriwal was on the cusp of getting bail in the ED case. This raises questions on the timing of the arrest. This raises questions on the conduct of the CBI, and therefore the Apex Court coming on a different view on that subject, on the legality of arrest. And that, of course, will now get decided by a larger bench. But the long and short is that as far as grant of bail is concerned, as far as Arvind Kejriwal walking out of jail, the Apex Court has shown the green flag. He's likely to walk out later today.
Thank you very much for that. That's an important political story. Arvind Kejriwal, the Delhi Chief Minister, will walk out of the jail on bail today. But let's get back to the markets and talk about stocks which are buzzing in trade. And topping the charts is Bharti Hexacom. And that stock continues to rally hard. Today it's up close to about 7.5%. But since its listing, it's had a phenomenal up move. Now, the news here is that Jefferies has upgraded the stock to a buy and raised the target price to 1,600. Now, the key reason for the target price for the upgrade is that earlier we were seeing tariff increases, say, once in 2 years. That's what happened for the last 5 or 6 years. That every alternate year you would have a tariff increase. But now Jefferies is making the case that we're going to see more frequent tariff increases, and they're going to happen on a regular basis. There are two reasons for that. One, Jio is focused on growth. Remember, at the AGM, Mukesh Ambani spoke about doubling Reliance Jio's revenues in the next 3 to 4 years. That cannot happen without tariff increases. Secondly, Vodafone Idea is losing subscribers. So if they have to generate the cash flows needed to make their debt repayments, then they will need tariff hikes. So the entire system is supportive of multiple tariff hikes. So according to Jefferies, the next tariff hike is going to be in Q2 of FY26, about 10%, followed by another 10% tariff hike in Q2 of FY27. So the change is that they have added one more tariff hike compared to their earlier estimate. The earlier estimate was a tariff hike in FY27. Now they're saying there'll be another one in FY26, and therefore EPS estimates have been raised. They're expecting a 25% EBITDA growth for Bharti Hexacom, best place to play the tariff game, and Bharti Airtel too. Again, on the same narrative, the tariff hikes will take place. They've upped the EPS estimates for Bharti Airtel, and the target price for Bharti Airtel also goes up.
A big move on Bharti Hexacom today, almost 7% higher. So that is what's happening in that particular name. But let's move on and talk about DLF, another brokerage note that has come by. Now, remember, DLF has done well in last couple of quarters when it comes to their operational performance, improvement in their balance sheet as well. They held a management meet and CLSA has written on that. CLSA has a hold rating with a target price of 775 rupees a share, which is lower than the current market price, of course. But the commentary was positive. They are targeting 15% growth in pre-sales and rental income over medium term. And they also expect their EBITDA and cash flows to grow at a higher rate. Cash flow improvement has been the big talking point about DLF because they have spoken about, or they have seen higher debt levels in the past as well. They remain positive on the NCR market and they do not believe the market is overheated because that has been an ongoing debate as well. The capital allocation with respect to free cash flows will be towards dividends and also capex and land investments. Now they are looking at expanding their land parcel as well. And unlike its peers, something like Godrej Properties and other names or Prestige as well, they are not looking at pan-India expansion, and they can look at entering select new markets such as Noida and Mumbai. They have taken up a land parcel in Mumbai as well, but it is concerned about the rise in scale of operation among the top developers, which they believe could be an execution risk. So while right now most of the developers are looking at pan-India expansion, DLF says that we wouldn't do that. It'll be only select markets because it could be risky.
Okay, that's some caution on board by the company itself, when it goes to expand in an aggressive manner. But Samvardhan Motherson is under pressure on the back of bearish notes. Vinny joins in with the details. Vinny.
Good morning, and yes, Samvardhana Motherson today is under pressure. We have two notes that have come in. Investec One has downgraded the stock to a hold and given a target price of 195 rupees per share. What they are saying is that there is weakness in the European markets, and 36% of revenue for SAMIL actually comes in from the European market. So a big concern comes in when you see a slowdown in this major market. Let's not forget, we have seen a lot of these global OEMs who actually cut the guidances in the recent time as well, and the most recent one being BMW, and that also is a concern in terms of the future growth confidence that Investec has in terms of the growth for SAMIL. So they've cut their FY25 to 26 estimate by around 3 to 5%. Let's not forget the stock has also seen a run-up, which they're highlighting 85% uptick versus the Nifty. It has outperformed. So clearly, they have been outperforming. So now maybe we could see some bit of a pressure given that it's trading at quite high in terms of valuations. Citi too is maintaining their sell rating target price of 105 rupees per share. They've opened a 90-day negative catalyst for the stock. A similar trend that they're highlighting, that European market demand is quite weak. Inventory build-up is what one is seeing. And the board has also raised funds of around, are going to be raising funds in the recent times. So they're keeping an eye out on that because debt is one bit of a concern that's there. They have 16,000 crores almost, which is there in terms of net debt for the company. So how does that move is a key factor to watch out for. But as of now, stock under pressure.
Yes, it's down around 2%. Thank you so much for joining us, Vinny, and giving us all those details. It's time to slip into a short break. When we come back, we'll discuss what's happening in the commodity space with Manisha Gupta. Stay tuned for that. Welcome back. You're still tuned into Trading Hour. Well, we've been speaking about individual stocks which are in focus. Gold financiers, these are some of the names which are surging in trade today. Muthoot Finance, Manappuram Finance. As gold prices, they've touched an all-time high. Abhishek is here to tell us more. Abhishek.
Well, gold finances are in focus given the fact that gold prices are at all-time high. In terms of the pricing, it's at $2,563 per ounce. If you take a look at the momentum with respect to gold prices, in last 1 week, it's up 2.5%. In last 1 month, it's up 7.5%. In last 3 months, it's up 18.5%. And over the year, that is year on year, it's up 33.5%. This augurs really well for gold finances like Muthoot Finance as well as Manappuram Finance. Muthoot Finance, remember, that has almost 98-99% of its business in terms of gold financing, while Manappuram has about 50-55% of the AUM in gold financing. So in Q1 FY25, we did see gold loan growth being very strong for these lenders on a sequential basis. Muthoot Finance, the gold AUM growth was 11% quarter on quarter at that time, and Manappuram as well, the gold AUM grew by 10% quarter on quarter. Just to alert our viewers, IIFL Finance has been absent from the market given the fact that RBI has put full stop with respect to the gold financing, and that also really augurs well for Manappuram as well as Muthoot with respect to their gold financing business. Back to you.
Okay, thank you, Abhishek, for joining in. Well, there's been some recovery on the Nifty from the lows. It is absolutely flat, but almost an 80-point recovery is what we are seeing on the Nifty. And this is led by Bank Nifty. So just pull up that index. Bank Nifty is up around 90 points right now. And it's a 222-point gain that we are seeing from the lows on the Bank Nifty as well. And Axis Bank and IndusInd Bank, these two names, they are at the day's high. And they are contributing to some of the gains that we are seeing on the Nifty right now as well from the low. So watch out for that one. There is some recovery that we are seeing. We'll have to see which way things go from here on. But it's time to focus on the commodity space. Manisha Gupta is joining us now with all the update. And today we are focusing on crude oil, Manisha.
Well, yes. Well, it's a good day, actually. You have gold trading at all-time highs. Metals are inching up to close this week on the positive. And so is the case with crude oil as well. After 5 weeks of constant decline, this is a week that the crude oil prices also have rebounded. Today is the third straight day that we are seeing gains onto this one. And we are headed for a 2% of a weekly gain when it comes to the crude oil prices. So the prices have come off its 3-year lows that we saw this week starting with. So very strong support continuing here. And as you can see, from that low of 69.2 that we saw this week start by, we're trading at almost 72.5 on the screens there. Well, the support clearly comes in from the Hurricane Francine, which has led to a lot of closures, partial shutdowns and evacuations within the Gulf of Mexico. Now, nearly 50 to 60% of oil production happens in Gulf of Mexico for the US. And we do understand that 42% of crude production right now within that area is shut. And going forward as well, for the month of September, the expectations are that you could be looking at some supply disruptions. UBS puts that number to 60,000 barrels per day, and FGE says that 60,000 barrels per day could be shut for the rest of September as well from Gulf of Mexico by the time we see those supplies come back, really. In the meanwhile, you have a risk-on happening. Commodities are gaining, equities are, dollar indexes decline, and we are looking at a rate cut cycle coming in from the global central banks. That in turn also seems to be supporting markets. Also, there is, while a surplus expectation for 2025, but for the near term, because of the kind of sell-off that we saw, some opportunity buying as well seems to be supporting prices.
Okay, thank you very much for that. Lots of action in commodities this entire week. We'll slip into a break. We'll come back and talk technicals with Mitesh Thakkar. Stay tuned. In a fresh development in the Adani Hindenburg row, short seller Hindenburg has reported a report by Swiss publication Gotham City, which claims that Geneva Public Prosecutor's Office was conducting a money laundering and securities forgery investigation into Adani's as early as 2021. The report also claims that $310 million across multiple Swiss bank accounts have also been frozen as a part of the investigation into alleged money laundering and securities fraud. Now, the Adani Group has rejected the allegations and said in a statement that the group has no involvement in Swiss court proceedings, that none of their company accounts have been frozen by any authority. The statement also says that no group companies have been mentioned in the Swiss court's order and that the group has not received any request for clarification from any of the regulatory bodies.
Okay, all right, that's the update coming in, but we'll move on and talk about the technicals of the market. Mitesh Thakkar is joining us for a quick technical check. Mitesh, good morning. Thank you so much for joining in. Well, what's the mood of the market now? We have seen a recovery from the lows. Do you think we could see higher levels from here on?
I think so. Good morning. So the idea is that the Bank Nifty is something, which I'm very positive upon, and I believe that after yesterday's big move, it's just a few hours of consolidation and a pullback. But I think the Bank Nifty could head towards 52,200 plus levels. So in that sense, I think, the indices could move higher. And on the stock side as well, I have some buy calls. The first being a buy on DLF. I think that's something, and in fact, the entire realty pack is looking pretty good. So DLF is a buy with a stop at about 847 and look for a target of around 885 here. And Tata Communication is a buy. Keep a stop below 2040, look for 2039, look for targets of 2120.
DLF and Tata Communication on your list. Mitesh, Kalyan Jewellers, what a move it's been. It's gained another 8% today. This month it's up 21%. This year the stock has doubled. Is it safe to take a bet on Kalyan Jewellers or it's run up too much?
See, from an investment point of view, yes, you will argue that, it's run up too much not to take a bet on it. And from a trading point of view, while we've been giving buy calls in between, after the last 5 days of movement, I think you would want to see a pullback before you want to get into it again.
Okay, so that's on Kalyan Jewellers. What about some of these IT names, Mitesh? Infosys, it's at the day's high. We have HCL Tech. Some of these IT names are supporting the Nifty as well, apart from Bank Nifty. Are you as bullish on the Nifty IT space as well? We've already seen it run up quite a bit.
So, I would, possibly go with the fact that the Nifty IT could see some more traction on the upside. We've had some very positive calls on LTIM, LTTS, etc. And, that's where the strength is coming from, though HCL Tech and Infosys are also participating well. Nifty IT is just hitting a fresh high after about 7-8 days of consolidation. So they should see, at least from a short-term point of view, some kind of a trading upside. And as I said, I think the stock charts look good. So I would be positive on Nifty IT as well.
Look at Birlasoft in the mid-cap IT space. It's surged close to about 3.5%. It's been a one-way upward chart. Mastech too has moved to the high point of the day. Zensar, Tata Technology, as some of the other names, it's a gain of 1%. But that intraday chart tells you the story of buying that's emerged in the morning. On the jewelry names, there are some of these smaller companies that are also moving up. So Moti Sons Jewelers, 6.5% gain on that. It's just a 250 crore market capitalization company. But this year, the stock is up 170%. But bear in mind, it's small. It has only 4 showrooms. They operate only in Rajasthan. But, Moti Sons Jewelers, and it's been rising on very large volumes. Volumes today are already 31 lakh and counting on NSE alone. So that's Moti Sons Jewelers. The other one is TBZ, 13.5% on TBZ. TBZ is bigger than Moti Sons, but it has a smaller market capitalization. And EPAC Durables, I think a 1 week or a 1 month chart should come up of EPAC Durables, because this is a stock which has been gaining every single day for the last 10 days or so. This week itself, it's up 25%. There you have that 1 month chart. Since the beginning of September, the stock has been on a surge. Mitesh, thank you very much for joining in. We'll slip into a very short break. We'll come back and talk market fundamentals. Vinay Paharia of PGIM India Mutual Fund joins in on the other side.
Welcome back. Well, we spoke about the technicals of the markets. It's time to discuss fundamentals. Vinay Paharia from PGIM India Mutual Fund is joining us now. Vinay, good morning. Thank you so much for joining in. But I was going through a report and it suggests that the market now seems to be turning in favor of high growth and high quality companies. What have the returns been like? Because this year, this fiscal at least, has been very volatile. If we talk about the benchmarks, a lot has happened in terms of macros, be it political issues as well, elections. So how do the returns compare for growth companies versus companies which are neither growth nor quality?
Hi, good morning, Sonal. Thanks for having me on the show. So, Sonal, as you rightly said, there has been significant volatility in this year. On the surface, market has corrected post-elections, post-BOJ's decision, but has continued to make fresh highs. But as I said, it is all on surface. Underneath, there is a big churn which is happening in the market. In the last 1 year, starting April 2023, we saw low-quality companies and low-growth companies deliver substantially higher returns compared to high-quality and high-growth companies. So the magnitude of outperformance of such low-quality companies was almost to the tune of 35% in the last 1 year or so. Starting post-election or maybe first week of June onwards, we have seen this big churn, which has accelerated in August. And based on our estimates, the broad outperformance of good quality and high growth companies over the low growth and low quality companies is approximately 10% in this period. So there is a clear churn which is happening in the market.
So how does one best play this in terms of mutual fund exposure, in terms of should one be having a large cap oriented portfolio? If money has to go in, fresh money, would you put it in large caps? What about any of the themes? Should one go for IT, a thematic IT sector portfolio, or pharma, FMCG? What's the advice for retail shareholders who are playing the market via the SIP route? So what would their mutual fund exposure be?
Hi, Rima. So I think one of the ways, and it is painful ways, is to start allocating some bit of money to underperformers of last year, because most of the funds or companies which have done well in the last 1 year's time are companies which are either low quality or low growth companies. And hence, these have started underperforming now. Whereas what underperformed in the previous year has started outperforming since June onwards. So I think a simple measure of doing that is to start diversifying your portfolios away from some of the strong outperformers of the last 1 year. If you talk about capitalizations, I think the gap is within the capitalization as well. So if you look at either large cap, mid cap, or small cap, we saw the same trend across all capitalizations, and hence diversifying by capitalization may not be a very, very useful strategy. They only have to start adding some of the underperformers of the last 1 year to start diversifying their portfolios.
Okay. Vinay, do you think, or tell us, what would the next big trigger for the market be? Is it just the rate cut that the entire market is looking at?
I think, Sonal, we should not look for many more triggers. The market has already appreciated quite significantly. We have borrowed some returns from the future. So I think the best trigger would be the market stays on course, looks at the underlying earnings growth. That's it. I think the economy is doing reasonably well. So if the market consolidates at these levels, I think that would be a best case scenario. And also, we think that the big trigger for growth companies would be interest rate cuts, and they are already being expected. So clearly, our thought process is that the growth companies and quality companies should start outperforming most of these low quality, low growth ones post the interest rate cuts.
Okay, fair enough. What about the broader call on the markets per se at the index level for the next 6 months? Because we are entering a seasonally weaker period for global markets. There's uncertainty surrounding US presidential elections. Q1 earnings were a bit subdued. So it's not that we've seen any kind of EPS upgrades, or they're likely perhaps in the next 3 quarters. What's the broader call for the next 6 months?
We would imagine that the market would ideally go through a phase of time correction, for the simple reason that we have already run up ahead of fundamentals. The market returns over the last few years is much higher than the underlying earnings growth, and hence the market needs to take some breather for the earnings to catch up so that the valuations become much more palatable.
But given the kind of wall of liquidity that's gushing in, there hasn't been a correction. The corrections have been limited to about 2%, 3%. An earlier guest told us this week that, now there is no longer the 10%. What used to be a 10% correction is now at best a 5% correction. That's the kind of market we're in.
I think people who would have seen the markets for the last 25 years would not want to comment on such a short-term phenomenon. Liquidity is strong, but remember the same liquidity, which is a virtuous cycle today, can also be a vicious cycle whenever the tide turns out. So I would just say that we just should ensure that we are not just dancing up right up to the clock strikes 12 and everything turns into mice and pumpkins. So we need to be very, very careful, especially in heady days like the times which we are seeing right now. We have seen many such phases in the last 25, 30 years, and hence I don't want that history should repeat itself, but we need to remember while history doesn't repeat, it rhymes.
So, since we are in heady days right now, Vinay, what kind of cash levels are you sitting on, and at what level would you be comfortable at deploying it back into the markets?
So we typically do not take any cash calls, Sonal, because we are mandated by our investors to remain invested in equity. But as we discussed right at the start of the show, we are invested in companies which have actually underperformed in the last 1 year's rally. And most of these companies have delivered very strong earnings growth. And these companies are not extremely overvalued as most other segments of the market, which we call them as micro bubbles. So we are invested in a part of the market which we think is reasonably well valued. Plus, the underlying intrinsic value growth in those segments of the market is very, very strong. And historically, the returns have followed the intrinsic value. So we think that over a 3 to 5 year period, investors in our funds should ideally also do reasonably well.
Okay. All right. Vinay, thank you so much for joining in today with your take and market fundamentals as well. That's the word coming in from PGIM Mutual Fund. Heady days for the market, so it's time to be very, very cautious. That's been the view of a lot of fund managers generally as well. But time for a short break. Abhishek Kapoor from Purvankara will join us on the other side to discuss the business outlook and the latest redevelopment opportunities that the company has entered into. Welcome back. You're still tuned into Trading Hour. Well, let's talk about Purvankara. The realty firm has acquired redevelopment rights for Miami Apartments, a prestigious society located in Breach Candy, South Mumbai. The site spans over 2,000 square meters, marking Purvankara's entry into the high-end South Mumbai real estate market. To discuss more on this, we are joined by Abhishek Kapoor, Group CEO at Purvankara. Abhishek, good morning. Thank you so much for joining in. But it's just not the Breach Candy project. There is a cluster development that you're looking at in Andheri as well. There's a land buy which is happening. There's a lot actually happening. The joint development agreement in Bengaluru, which you have reported to the exchanges. Just on the redevelopment bit, there have been a slew of announcements in the past couple of quarters as well. Has it already started contributing to your sales right now? If not, say 2 to 3 years down the line, what percentage of your overall sales would come from redevelopment?
Very good morning, and thank you for having me on the show. As you rightly pointed out, we have been very active in acquisition, both in Bangalore and in Mumbai on the redevelopment projects. Currently, we haven't launched the redevelopment projects, but we have about 5 ongoing projects in the western region between Mumbai and Pune. We intend to bring these redevelopment projects to market starting this financial year. And we are expecting that between this and next financial year, we should bring all of these projects to the market. Our estimate is that we will eventually in next 3 to 4 years time frame see on a much, of course, on a growing scale, see about 30 to 35% of our business coming from the western region. Of course, given also the fact that we'll continue to grow in Bangalore and the other markets that we are present in. So there'll be a lot to catch up for all the markets in terms of our team. And we're pretty excited with the redevelopment projects that, we are expecting to launch.
How much will redevelopment be as a part of the total sales value? In that 30 to 35%, how much would redevelopment contribute?
Look, I think we are expecting almost 15 to 20% of the overall business, which is, of course, as you would know, we are in 9 cities today across the country, and we're also entering NCR. We'll expect that on a larger scale, at least 20% of the business will come from the redevelopment. We also have outright, we just acquired a land of about 12 acres in Thane, which will also go to the market. So, given all the JDs and all the, outright transactions that we are doing, I would expect that about 20 to 25% of the business still to come from redevelopment space.
And how will this change your margin profile? This focus on Western India, Mumbai, Pune, etc. And some of these projects, like say your, South Bombay project, it's going to come in at much higher average sales realization.
You're absolutely right. So, our entry into Mumbai will ensure that our average realization goes up significantly, and a project in South Bombay or the one that we have in Pali Hill or the one in Lokhandwala. But now, if you see the trend, we are kind of in all parts of Mumbai. And all of these will significantly contribute in terms of absolute numbers, both on the realization as well as on the margins on a per square foot basis. So we will see increasing contribution and an absolute number margins and both realization in the coming times on an overall basis. There'll be a very, very positive impact of this.
Okay. Abhishek, how much higher are margins in, say, a redevelopment project versus a project where you've just bought the land and you are constructing a building? And what is the lead time period difference, say, from you get approval for redeveloping a building to finally constructing it?
So two parts. One is as far as margins are concerned, you would see typically in an outright transaction where you own the land, the margins are typically higher. That's somewhere in the range of 28 to 35% EBITDA numbers. But if you look at redevelopment, it would be lower because though you're not paying upfront for the land, but there's significant cost of approvals that are required to be incurred. And of course, rent, corpus, all of those costs are there, which are upfront costs prior to launch. But you would see a typical EBITDA number of 22 to 24% as far as the redevelopment projects is concerned, though you will spread your expenses towards land, which is towards the construction of the members area, rent, corpus, and approval costs over a time. But even then, it comes out to be around 22 to 24%.
What is the call on pricing in Mumbai and Pune, where you are, focusing a lot? Some say that perhaps prices have stagnated. So much of the redevelopment supply is going to come in the market in the next 1 or 2 years, including yours and for so many other builders. Half of Mumbai appears to be under redevelopment. So there is going to be a lot of supply. Do you think that puts a cap on prices, or perhaps prices come down?
See, Pune, I think, has headroom in terms of price appreciation because I think there is significant traction in Pune. As far as Mumbai is concerned, so I would see, typical inflation-linked price appreciation in Pune. As far as Mumbai is concerned, I think Mumbai itself is like a country and it's going through a serious urban rejuvenation in my mind with all the infrastructure happening and all of the redevelopment happening. But there is very significant demand in the Mumbai market itself. I mean, really, it's like a world in its own. So in that sense, we see that continuing and the demand continuing. I think asset prices or project prices will go up from the launch to completion like it goes in all real estate projects. So what may happen that you may see that launch prices typically may continue to remain steady or may just remain inflation linked. But appreciation within the project, from the launch to completion, you will continue to see the same cycle because that's how the real estate cycle works, where you see from launch to completion about 50 to 70% appreciation. So that, I think, trend will definitely continue. Now, as far as supply is concerned, I think two aspects to it which we need to be mindful of. One is the fact that, which micro market are you participating in and what kind of a project are you bringing in as a developer? So if you have a significant USP, which really, differentiates your product in the micro market you're present in, then I think it'll be a significant advantage for you. So for example, all our acquisitions, if you see Pali Hill, that's a very prime 2.5. There's nothing which is that size there. This particular project is again very significant. It's like right overlooking the sea and so on and so forth. So, and Thane, the one we acquired, is again a super prime. There isn't any plot available in that location. So, if your acquisition is right, I think everything else will fall in place.
I think, Abhishek, everything is prime in Mumbai. The way rates are going higher and the way the pricing differential I've seen in the Andheri project versus the Breach Candy South Mumbai project, everything is sold as a prime project in Mumbai. But let's talk about your debt, because it has increased. I know you talk about how your debt per square foot has been going down. But even then, you do have cash in your books. The absolute debt is going higher. Why is it that we're not able to reduce the debt overall in absolute number? Because with newer launches coming in, newer projects coming in, your cash flow should improve.
So cash flow, if you see, is continuously improving. I mean, our average run rate on cash flow is over 1,000 crores. And I think that will only improve with the new launches that we're adding. What happens is that, see, debt is, there are two parts to it. Now, while you have the cash, a lot of this cash is sitting in the projects where, RERA is there and we have to keep the money in the account. Now, the only thing that we are trying to do is pay a little in advance and little early. But if you see on an overall basis, our breakout of the debt or the breakup of the debt, you would see about 250 crores is sitting in commercial, which is asset creation. About 2,200 crores is self-repaying debt, which is, basically in the residential projects, which will naturally on its own account in the manner that it has been agreed with the bankers or the financial institution will go down in its natural course. So, there is a very insignificant, about 700 crores total compared to the overall, because net debt now is at about 2,200 and 2,100 is already getting repaid from residential, and about 250 is getting, into commercial asset creation. It's a small amount to move into the residential category. And we don't intend to, reduce the net debt number because we want to grow faster and make this an insignificant conversation compared to the pre-sales and the business that we are doing. So if you see, for example, last year we did about 5,900 crores of pre-sales, and this year, in fact, we are planning to launch about 17 million square foot, of which about 12.7 is new launches and about 4 million odd is opening new phases. So the business that we're looking at doing goes up significantly, and this starts to become really, really irrelevant, in that sense of conversation.
Abhishek, quickly, we don't have much time. QIP plans, you had gotten the board approval. By when do we have a finality on that?
Look, as you rightly said, we have the board approval, we have the shareholders approval. I think we will come back to you as and when we have an update on this. But, from our options of raising capital, we have multiple options to continue to raise capital. And I think we'll pursue all of those opportunities and at an appropriate time, update you on this one.
Okay, all right, Abhishek, thank you so much for joining in today with all those details and a whole host of business updates as well. That's the word coming in from Purvankara. The stock higher in trade up around 5%. We'll slip into a short break. Up next, we'll put spotlight on IPOs and the IPO rush that's taken place so far this year. Stay tuned for that.
Welcome back. So the primary markets have been abuzz with activity in 2024. In fact, Bajaj Housing Finance created a record with a demand of more than 3 lakh crore and applications of nearly 89 million. The number of companies that have made their debut is already at par with the number of IPOs seen in the whole of 2023, and we still have more than 3 months to go. So how have these IPOs done? What lies ahead? Hormus is here with that analysis. Hormus.
Well, the market may have had a very topsy-turvy ride through this year en route to record high levels. But for the IPO market, it has been smooth as a highway. Now, that's because 57 IPOs have already closed for subscription so far this year. The number in all of 2023 was also 57. But the differentiating factor as of today is the fact that the IPOs of 2024 have raised more money than all of 2023 put together. Now, according to this data from Prime Database, the IPOs of 2024 have so far raised almost 62,650 crore. That is well above the 49,400 crore that companies raised in the primary markets last year. Now, this list includes IPOs that were open for subscription but have not listed yet as well. Now, September traditionally has been a good month for IPOs, and the 7 issues so far have already raked in over 9,000 crore rupees. But August has been the best month of the year so far in terms of funds raised, as over 17,000 crore rupees have been raised by 10 IPOs that month. Now, how have these IPOs fared? Now, 5 of these issues have returned 100% and more from their IPO price. Now, 30 of them have gained anywhere between 25% to 99%, and only 7 such IPOs are currently trading below their IPO price. It shows you the kind of market that we have been in. Now, unlike 2021 and 2022, there have been no giant-sized IPOs this year. While 2021 had Paytm, which looked to raise over 18,000 crore, LIC surpassed that in 22 with a 21,000 crore issue. Now, Bajaj Housing Finance, which has now become the talk of the town for the bids it received, is the largest IPO of the year with around 6,500 crores, followed by names like Ola Electric, Bharti Hexacom, and of course Brainbees. Now, 45 IPOs this year have delivered positive returns to shareholders. Now, among them, Jyoti CNC is the top performer, with the stock more than tripling from its IPO price. The recent listings like Unicommerce and Premier Energies also find a mention, considering the strong moves they have seen just a few days after they listed. Now, among the few IPOs that have delivered negative returns so far include Capital Small Finance Bank, Popular Vehicles, among other such names. However, none of these names have any substantial downside from their IPO price, such as a 50% or more from their IPO price. It's been a big year already for IPOs, and we still have 3.5 months left. Now, at this pace, it will not be a surprise if by the end of the year, we end up doing a story saying IPOs have raised 1 lakh crore so far this year.
Okay, and still 4 months to go, so it could be a possibility. You never know, right? Harmaz, thank you so much for joining in with those interesting details. So a lot of rush in the IPO market as well. With that, let's move on and talk about a stock, Nazara Tech, which will invest 982 crore rupees in Moonshine Tech, which owns online poker gaming platform Pokerbazi. Nitish Mitra Sen, the joint MD and CEO of the company, tells CNBC-TV18 that the company continues to be well-funded even after the acquisition, and adds that they will look at fundraise. The time and quantum, however, remains undecided. Listen in.
I think with this current Pokerbazi transaction, they are the market leaders by far, over 55% market share, a fantastic team, and significant growth. We put out some numbers and you can see how they're growing. So we think it's the right bet for us to take. We are very excited about it. In terms of cash reserves, we continue to be well funded. We are a cash flow positive company generating free cash flow every year, and we will continue to be acquisitive, in opportunities that we like. We may raise some additional primary capital as and when we require it. So we had 1,400 crores of cash on our books. Post the recent acquisitions of the Kiddopia stake and the Fusebox UK studio, we had approximately 900 crores left. So we can fully fund this on our own steam, but we will also, look at getting some good investors on board. This is a good opportunity for that. And in the coming days and weeks, hopefully we will be able to achieve. So we haven't decided the route we will take, nor the amount, but we will partly fund this transaction that we are going to, pay out for.
Okay, that's the big acquisition made by Nazara Technology. They'll be paying nearly 1,000 crore rupees. The acquired company had revenues more than 400 crore last year, which is about 36% of Nazara's annual revenue. So big sized acquisition. But with that, it's curtains down on Trading Hour from the entire team. Thank you for watching.